Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today is November 8th, 2019, Friday. I am recording this intraday, midday. As I record this video, market should be open another 2 hours. So let's continue with our weekly analysis. Let's start with the Spider, Q's, Diamond, Russell, and Banks, and the semis here. Let's start with the Spider here. As you can see, we've been talking about this level here. This is a rising pivot, right? It has been a resistance in the past. We've broken above that area. We're probably gonna come back to retest it. I'm not sure when, but we just pretty much been consolidating here. We may come down. This is pretty much, you know, we may come down and retest this or challenge this gap, or we may continue to grind higher. Nobody knows, but it really doesn't matter if you're longer term, unless you're trading, you know, on a daily basis, day trading here and there, but or any kind of short-term trading maybe is important to you. But somebody like me, you know, who's you know, I think I'm much longer term than most of you guys, but I look at things in an overall trend perspective, and I am very bullish in the market. I was very bullish since early part of this year and throughout this year. And now that we're finally breaking out, I am increasingly more bullish. That does not mean I'm going to start buying the breakouts. It just means the overall sentiment of this market trend is just getting started. It's just starting to develop, right? We pretty much been having this pretty much about you can look at this as now as a consolidation, right? Pretty much about 2 years consolidation. Consolidation is a good thing, because obviously, you know, when you see a big move like that, look at this parabolic move since 2016. Look at that move from here to here. You see that kind of move, right? It's a good thing that market makes this adjustment and have this congestion or, you know, consolidation phase. And you can see the huge, that 20% decline that scared a lot of people out, right? 1929 Great Depression was supposed to come. 1987 Black Friday supposed to come. 2008, you know, financial market meltdown supposed to come. Well, none of that came. Instead, we saw the fastest V-shaped reversal we've ever seen in our life, in the history of a stock market, actually. You know, we talked about that in the last week's market update, where you're not going to find where market dips 20% since its peak, and where market just goes right back up, V-shapes higher and near to the all-time highs. We've never seen it. This is the first time we're seeing. We're witnessing history here, right? This is gonna be in Guinness Book, right? Like, first time V-shaped reversal after 20% decline. Never happened. Guinness Book of stock market, right? And then we saw these sharp declines. Again, nothing crazy about that, because, I mean, after, you know, you see a big move like that, you know, let market pull back, you know, and see some volatility. But again, in itself was a consolidation, right? So you can look at this big picture. Okay, you want to look at this as like a primary term type of picture. We see a big move, consolidation along with the pullback. And then you want to look at, you know, let's say that that's a primary term. Looking at things more of an intermediate term, you see a big move and then a consolidation. So it's kind of like a, you know, the way market is like fractal, like the fractals, like we got big wave, medium wave, small wave, and it just happens over and over again, right? Does it make sense, right? Again, big moves, pullbacks, consolidations before another big move, right? And then that's a primary term. We get intermediate term, we get a big move, pullbacks, consolidation for another next leg higher, right? The way the fractals work. So I'm increasingly bullish in the market in the intermediate to long term. In the short term, I don't really care. If it comes down and pull back steeply and goes back inside this range, right? That's, I think, what a lot of, okay, so this is what I'm gonna say what bears are gonna say, right? What most people are gonna say. So let's say if this thing pulls back next week and we start to get back inside this zone, right? We came back inside. You're gonna see charts people are drawing circles and things and say, that's the top, that's a bull trap, man, that's a mega mother of all trap, and this thing is going down. We're gonna be in reset. You're gonna hear that. I guarantee it. So, you know, I'm gonna like, you know, call it now. That's what's gonna happen. If we do see something like that, they're gonna say that's gonna be the mother of all bull trap. That's what they're gonna say. What I'm going to do if that happens and start coming down pretty heavily and come back to like 297 or something like that, let's just say it happens, right? Let's just say it happens. You know, let's do a little fib and see where the 50%. Yeah, 50 comes in right to 297, which is coinciding with this kind of big gap area. That makes sense. That's a pretty decent gap area there. We got a couple gaps, and bears have to blow through those, and those levels are gonna provide pretty solid support. I actually leaning towards not. I'm leaning towards maybe 300, possibly 290. I'm really leaning towards more this area if we do see a pullback. But let's say bulls really bring it down. We got some big, heavy pullback. Comes to about 296 or something like that. Well, I'll be buying the dip. That's what I'm going to be doing. And then people who's going to calling the mother of all trap, you know, they're going to be faced with the next move that is going to go even higher than 310, and that's probably where we're going to go to 320 then. Or we pull back a little bit, goes back, something like that. Or we go up and continue to higher, we come back and retest that, you know, you get that pay attention to that pivot, because sooner or later it's going to retest that. Either we go all the way up here, start coming back retesting like this before going to 340 or something like that next year. But this level is going to become important. Either it's going to be happening this year and early next year, but I believe that it's going to be important. So we'll continue to take a look at it and follow up. But there are a lot of options going to happen. Either way, we're going to go higher. And I think I said the same thing up here in these levels. You know, we're going to say pullbacks, but either way, if you guys remember, if you guys follow my videos, either way we're gonna go higher, and we're already at 308. Isn't that crazy how fast the sentiment changes, right? I mean, just be honest with yourself. How did you feel when the market was at 230? Total panic? How did you feel when the market did do that, but when these things are coming down hard, how did you feel here, versus how do you feel now? You know, you'd be surprised how quickly sentiment can change in the stock market. Let's go to Qs here. Qs is also breaking out. You can see we're just clearing this level. Same analysis, same assessment. Comes down, maybe the worst case scenario, 191 or something like that. But we're gonna pay attention to this level. That you know, we're gonna pay attention to that pivot, because I think sooner or later we're gonna come and retest it a couple times before we got into next level. But I don't know if we're gonna pull back first, get back inside. I don't know if we're gonna go higher and pull back. We're gonna pull back a little bit for now. It really doesn't matter what's gonna happen in the short term. I'm more concerned about what's gonna happen in the intermediate to primary term. Let's go to diamond. See, diamond is, you know, we finally broke out of diamond's been actually bound by this resistance for quite some time. It didn't break out until yesterday, and this is the reason why I actually wrote that article. The market is breaking out, it's bullish, because I saw diamond finally breaking out along with other indices. So that kind of confirms that diamond is joining this party. And so you can see, but diamond is still lagging here. It's 18% year to date compared to Spider 23. But nonetheless, it is making new all-time high. Again, same analysis, same assessment applies here. I think the worst case scenario, this thing maybe come all the way down to 267, but we got a little gap here. So there, that short-term support right there, 2676, 274. Actually, there's a lot of gaps. Just do that. There's gap here. There's gap here. There are a lot of gaps. Unless like bear is gonna like really bring it down hard and gap it down and something like that. If this thing's like grinding like that, they're not gonna bring it down with the grindy move, because all these gaps are gonna provide support. If the bear is gonna bring it down, they're gonna have to bring it down with something like that. But I'm kind of inclined to say we may not gonna get something like that. maybe 1 day or so before I back up, right back up. But let's get rid of that. Yeah, those levels. You know what? I'm gonna do something like, you know what? Let's do that. I think worst case scenario 270, 260. If it comes that level, I'll be buying that. But right now we are staying above it. And again, watch, if this thing goes up a little bit, start falling back inside, you're gonna hear people saying mother of all trap. And that's not a trap. That's what you call uptrend. That's the cultivation of higher highs. Most people don't realize. Russell 2000 breakout with that kind of a short-term resistance level. They were finally retesting this level. This is an important level because we've been staying in this range pretty much all year long here, and this is a pivotal level because bulls finally trying to attempt to break out and was not able to do it, right? So we came back down to retest the lows, but really what it really was just pretty much we're just stuck in this range of consolidation, and we're back at it. So once this thing reclaims for the first time, I think that's when you're gonna see higher highs developing. We already got higher highs, got higher lows, and then I still think Russell 2000 is going to retest is new all-time high level at 172 before this year ends. That's what I'm thinking. Look at the banks. The banks is finally beating the S&P. Do you guys remember when I was doing analysis and like spiders were at like 19-20% year to date? See, that's year to date performance there. And the banks were like 15-14%. Remember that? And I was like, watch, banks are going to outperform. And that's gonna be the catalyst for the market to prop up. So what's gonna happen is these lagging sectors, especially XLF, you know, it was lagging a lot. Now it's at 25% year to date. It's just, look at that, from here to here, just parabolic move. We're near the January highs here for the first time in like very long time, right? 2 years almost. This was a pivotal level, obviously. That was a very important level, right? Because the last time we hit that thing tanked. We reclaimed that, and now we can no longer look at this as lower highs and lower lows. Now we gotta look at this as either inverted head and shoulders or big base, right? With the cultivation of high, higher high. Now the whole dynamic shifts from bearish downtrend into bullish uptrend. Very interesting here. Any kind of pullback at this point, you know, would be an opportunity to buy. Though sometimes market doesn't make it that easy, because now the sentiment is shifting bullish, everybody's looking to buy that dip. Well, when everybody's looking to buy something or anything, market usually doesn't give it to them, right? Market does not give it to them. Let's go to semiconductor. We'll end the video with this. Yeah, you can see here a lot of bears gonna look at that as a bearish rising wedge, you know, but it never really broke out to the downside. It actually broke out to the upside. Continuous breakout. Look at this performance. Semiconductor up 52% year to date. I remember, you know, late December 2018 and even early January of this year, a lot of people came to me on Twitter and like, oh, aren't you worried about semiconductor? Semiconductors down quite heavily. Semiconductor have confirmed its reversal, topping pattern, you know, looks more like 2008. And I was hearing all those things. And guess what? Semiconductor is completely leading, just leading the charge. 52% year to date. It's actually, if you measure it from the December lows, 65% from the December lows. And so I've been very pleased about that. I was able to accumulate some triple shares on it at the lows. I've been buying, and these dips were pretty good because I was also accumulated from those levels and holding still on those. So let's keep this video short today. pretty much not a whole lot happened since last week's update, but pretty much reiterated things and give you possible levels to watch out for next week. But market is bullish. The sentiment, the trend is bullish in the minor term, bullish in the intermediate term, bullish in the primary term. We are overbought in the... We're overbought. What did I just do? Here, I'm going to fix this later. We are overbought. This is daily chart. In the short term. So this is short term. We are overbought. But doesn't mean just because we're overbought does not mean it. Look at right here, we're overbought with a little bit of pullback or consolidation. It kept going higher and higher, higher and higher, 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 right? Even here, little pullback, going higher. But here we tanked, right? So here, I don't know. We're overbought in the short term. That again, that does not mean it cannot go higher for the next 3-4 months like it did here. February to May, 3 months. I mean, we had a little tiny pullbacks, but it kept going higher, right? So we'll watch that and see how that plays out. We'll take a look how the market behaves next week. And again, you know, when I see it, I'll tweet things out at 2K Kim on Twitter. You can follow me also at my blog at twotradersclub.com. And we'll go from there. And, you know, like, because I don't always tweet every day. So, you know, if you go to, this is my blog. This is a post that I just wrote yesterday. But if you go to like twotradersclub.com, hit on market analysis, you'll come to this page. You can always go here, right? So you can put your email and no spam, no marketing crap. You can, every time I write a new article like this, or do a video like the one you're watching, you'll be notified in your email with the link. So you don't have to, like, you know, kind of search through. I think a lot of people do that. So just thought I would remind you guys. Anyway, yeah, you guys have a wonderful weekend. Good luck trading next week.